Liquidity sweeps are one of my favorite trading confluences, and the reason why is because you're literally entering a trade after a majority of retail gets stopped out. This offers a very high probability trade setup as well as a very high risk to reward ratio. However, there's a lot of misinformation that I've seen on YouTube regarding liquidity sweeps and how to actually use them the proper way, because if you were to just take every single liquidity sweep that you get, you're obviously not going to be profitable. But when you use a system that I'm going to be showing you guys using something I call a point of interest, it increases the likelihood of a liquidity sweep playing out tenfold. So let's actually talk about what a liquidity sweep is to start. This is kind of like a buzzword right now in the trading community. All a liquidity sweep is a swing failure pattern, or a failure of a key level or point. So for example, if I look at Bitcoin on here, I can see that we have this major swing low here. I see we have a swing low here as well. And I can see we have a swing high up here. Okay, these are just the most obvious pivot points or liquidity levels that I am looking at. Now, a swing failure or liquidity sweep is when price comes below this level and reclaims it or closes back above. This is also called a failure and reclaim. Again, there's a lot of terms in the trading space that all mean the same thing. Don't get too caught up in the wording, but all it is a failure of a key level or point. So for example, here I see we have this key structure low. Price comes below this level and then we go up, even if for a brief period. That is a swing failure pattern or a liquidity sweep of this structure low. With this low over here to our left, if price were to come below this level and reclaim, that would be a swing failure pattern. We look to take longs on the reclaim of these levels. Now, obviously, if you're looking at this chart here, you can see that not every liquidity sweep plays out. For example, we have this structure low right here. Price comes below this point, reclaims it, and then we immediately dumped. On the 5-minute time frame, you can see we came below this level, we reclaimed, but if you were to enter on this reclaim, you would have been stopped out on this trade. So how do you know which liquidity level to take a liquidity sweep off of? By using something called a point of interest, it can actually help us mitigate these otherwise false signals. Now, before we get into the point of interest and what that entails, let's talk about how to actually enter a trade using liquidity sweeps. Now, there's many different ways people use liquidity sweeps to enter a trade. Some people will enter the trade as soon as price reclaims that previous low. So as price comes below and after we reclaim that on like a 5-minute time frame, you can also use a liquidity sweep as a leading indicator. For example, in one of the strategies I use, I look for a swing failure pattern or a liquidity sweep into a break of structure to the upside, followed by a retrace into our optimal trade entry, otherwise known as the 1-2 setup. But in my opinion, the best way to use liquidity sweeps is in confluence with key levels or a point of interest. So this is how you are able to mitigate these otherwise false signals. Now, what you want to do is identify your key liquidity levels. For example, this level right here. I can see we have this level right here. We have this level all the way down here. We have this level right here. We have this high right here, and we have this major pivot high right here. Now, instead of taking a trade at just any one of these levels, I want to stack my confluences. It is just another indication pointing at price going in a similar direction. For example, a support level or an order block, or my favorite, which is the golden pocket fib, or you can use key levels inside of the easy algo trading indicator. We actually have automatic support and resistance zones. As you can see here, we're getting these 1-hour support zones overlapping that order block. If you guys want access to my trading indicators that automatically displays multi-time frame support and resistance, as well as an auto golden pocket fib to completely remove the guesswork, make sure to click the first link in the description below. So what you're looking for is confluence with your liquidity levels and a key level or a point of interest. Key level is just another synonym for a point of interest. This is going to be an area on your chart that you are interested in taking a trade off of. Now, what you want to see is alignment between that liquidity level and your area of interest. I'm going to turn off the support and resistance zones for now. I understand we have a key 1-hour level right here that perfectly overlaps that order block. So here we can see we have an order block and we have this liquidity level that lies right above it. When you are in an uptrending market, like we are seeing right now, if we go to a 4-hour time frame, we're clearly breaking structure to the upside, creating higher highs and higher lows. We want to see that liquidity level lie right above our point of interest. For example, our liquidity level is right here and we have our point of interest right here. This confirms to us that if we see a bullish reaction off of this order block and reclaim this liquidity level, creating a swing failure pattern, we can take the trade. So for example, in real time here on Bitcoin, I dropped to a lower time frame. This would be my entry right here with my take profits as these other liquidity levels. Now, why is this trade valid here? Well, first of all, we understand that the trend is bullish. We're testing our key level, which is either our easy algo support level, our higher time frame order block, or our golden pocket fib, and we are taking out the liquidity beneath this low. Because put yourself in the mind of a retail trader. If you are a retail trader and you are long from somewhere around here, you're gonna put your stop loss below this low. So we are anticipating price to come down, take out these open orders beneath this low, tag into our point of interest, and then take a long position off of that level. We also have that trend bar turning bullish on our easy algo indicator, and we're seeing bullish divergences on our oscillator. But I really want to get you guys in the habit of only taking liquidity sweeps after a tag of your point of interest. If you do not have a point of interest or a key level aligning with that liquidity level, that is going to be a lesser probability trade. Let's take a look at some other possible trades in real time using these liquidity levels and anticipating a liquidity sweep. Well, I can see we have this liquidity level right here. Now, all we're going to do is look for other pieces of confluence to confirm that this is a point of interest. If I grab my golden pocket fib, I can see that that golden pocket fib is perfectly overlapping that liquidity level, meaning this is also another really good long idea. I know that if price sweeps this level, tagging into the golden pocket and reclaims with those lower time frame confluences like a bullish divergence or a bullish break of structure, that this will be a high probability trade. Now, let's say, for example, we had a liquidity level all the way down here that comes after the golden pocket. That is not going to be a high probability setup. You want to see these lows if you're in a bullish market structure, either slightly above or overlapping your point of interest. Also, it looks like we're building up some more liquidity here with this current price action. You can see not only do we have this liquidity low to take out, we also have this most recent low. So now we have two sets of liquidity here at this equal low, otherwise known as a strong draw on liquidity, meaning price is very likely to come down and take out both of these lows. So what I'd be waiting for now is a tag into this golden pocket, taking out this low, and then reclaiming that most recent low as my entry trigger. So my setup would look something like this, again, targeting this high all the way up here, moving my stop loss to break even at this most recent structure high. This is how we're able to get very large risk to rewards, meaning you could lose 3-4 trades in a row, but if you have one winning trade, it can make up all of the losses. So in real time, this is a really good example here on Bitcoin. Again, just to recap why I'm looking for a trade here. Number one, we have our liquidity low perfectly overlapping our point of interest. In this case, our point of interest is the golden pocket fib. This is something I've taught on this YouTube channel for years now. It doesn't have to be a golden pocket fib. Remember, it could be a higher time frame order block. It could be a support zone with price history. It could be a higher time frame fair value gap. All you're looking for is confluence. When you see this liquidity level overlapping your point of interest or slightly above if you're in an uptrend, this offers a really good potential setup. I'm also looking for a trade here because we have an equal low, meaning we have one low and then we have a second low that did not take out this first low, meaning this is a strong draw on liquidity. So all I'll be waiting for now is for price to sweep these lows, reclaim these lows, creating a swing failure pattern with bullish divergences on a lower time frame. So I'd look for bullish divergences on a 15-minute, 5-minute, and reclaiming those liquidity levels, and that would be my entry trigger. By the way, these are the exact setups I'm posting every single day inside of my pro Discord. So if you guys want to follow my exact trades on a day-to-day basis, make sure to click the first link in the description below. Now, we can do the same thing for a short position. If we draw our golden pocket fib from that swing high to that swing low, we can see that this liquidity level perfectly overlaps our golden pocket fib. I can also see we have this previous bullish fair value gap now creating an inverse fair value gap. So this is going to be our point of interest. And because we have that liquidity level perfectly overlapping our point of interest, this gives us a really good potential short idea. So again, what I'd wait for now is for price to come up to this level, drop down to a lower time frame, look for those bearish divergences, taking out this high and then closing back below, and that would be my short trigger. Now, this is a little bit higher risk because we are in a bullish market structure on a higher time frame, but just to give you guys an idea of what to look for as far as your liquidity level aligning with that point of interest. Let me show you guys one more example here on Hyperliquid. This is also a trade I posted inside of the Pro Discord. First thing I do is identify the bias. On a higher time frame, we are in bullish market structure, so I'm going to be looking for longs. I can see we have a ton of lows here that price has yet to take out. By take out, I mean price will go below and then reclaim these levels, taking out the open orders below these lows. Now I'm looking to see if we have a point of interest here. Well, I can see we have a 1 hour bullish fair value gap here that is unmitigated, meaning that price has not tapped into this level yet. And if I take my golden pocket fib from the most recent swing low to that swing high, I can see we have the golden pocket fib just below this level as well. I'm also going to get my fixed range volume profile, see if we have any other confluence here, which we do. We also have our value area low. This is a high probability level on my chart where I can see price bouncing from. So all I'm going to do now is wait for a liquidity sweep or a swing failure pattern of these lows. As soon as price reclaims those lows with bullish divergences on a lower time frame, I'm going to enter the trade, targeting this high over here to the left. Again, the reason that this trade is valid is because number one, we have multiple sets of lows over here or a strong draw on liquidity, and we have our point of interest or our key level with this bullish 1 hour fair value gap, this golden pocket fib, and the value area low on the fixed range volume profile. So this is a high probability setup. To kind of draw out on a diagram what you want to see, it will look something like this. This is roughly what price will look like, right? You're in an uptrend, higher highs and higher lows. You have your key level right here, which in this case will be an order block or maybe your golden pocket fib. So we would call this your point of interest. And we have this liquidity level right here. So all we're waiting for now after price goes below this liquidity level is to tag into our POI, reclaim that previous low that we had taken out, and that is going to be our long trigger with our stop loss at that most recent low, targeting higher prices. And obviously the reverse is true for a short position. Well, I hope you guys understand how to trade liquidity sweeps a little bit better now. Ton of sauce dropped in this video. So if you guys found value, make sure to leave a like, comment down in the comment section below if you guys enjoyed. Make sure to click the first link in the description below to get access to my pro Discord, where I'm posting these setups every single day in advance. You will also get access to my custom trading algorithms that you see on my chart here. Subscribe to the channel for more trading content, and I'll see you guys next video.